Nasdaq's lower by 1%, so we've got a bit of a sell-off. Kevin Green joins us for some perspective. KG, we've been pretty much up and to the right, so a little sideways to down. How much does it stand out on the chart?
Well, if you're looking at the open interest chart, we kind of talked about that stochastics indicator this morning, potentially seeing a cross between the fast moving average and that slower moving average. And that's exactly what happened here today, Oliver. So we are seeing a little bit of a pullback, down about 0.5% for right now when you're looking at the S&P 500 and hitting a key area of support here for the most part, the 60-50. We did see some put flows over the last couple of hours here going into that level. But now the question is going to be, are we going to see some short covering taking place? Basically, those that have been trying to short this market, buying those contracts back, as well as buying maybe some of the equities back, and then also hopefully having an aggressive, market on close order to the buy side here to try to bring us back to the upside. Now, what you would look for is trying to close at around 60-70 would be kind of our balance area for today. That would be where we would be for the most part net neutral. So a little bit of a ways from these current levels, but I wouldn't get too concerned about this sell-off. It's actually kind of healthy. And if we kind of look back a little bit more, that 20 period moving average that we have been talking about sitting right there at 6,000, that's also where that negative gamma area is for open interest, which measures the positions across all of the expirations for the S&P 500. So even if we had another 50 points left to go to the downside, the trend is still to the upside here. I wouldn't be too concerned with this price action today.
Okay. So then the pressure point, if we start really breaking, is there one anywhere nearby, or that just, when you kind of go up and have so much momentum behind you? I mean, I feel like 60, 50, 6,000, those are the two main levels we talked about on the way up. So I guess we should expect some support.
Potentially, when you're looking at the positioning itself, 60-50 is not really a major level, even though we are seeing it on an intraday basis. That's where we saw some of those put flows earlier in today. But when you're looking at a major level, 6,000 is obviously going to be that first major level. And if you break below that, 59.85 is another one that has a considerable amount of concentration, both on the call side and the put side for the S&P 500 across those expirations. So once again, this is orderly. Even if we do see more of a pullback, this is an orderly pullback. The advanced decline line actually has been kind of flipping back and forth. It was pretty much 50-50 when you're looking at advancing stocks to declining stocks. So this is more weight that's being put on the mega cap names, the selling off of Nvidia causing a little bit of pressure here. I'm not sure where Tesla's at right now, but I know that that's been moving to the upside and downside in today's session as well. Still a lot of activity there. But that stochastics cross is the one that I'm kind of being mindful of, that where it does kind of signal, yes, maybe some further movement to the downside could be warranted. And rightfully so. We've had a really nice run to the upside here, but if it's slow and gradual, it's not really erratic. Liquidity is still in the market. It's really healthy if you're kind of looking at the levels of liquidity right now compared to what we've seen over the last 3 months. So we're able to absorb this, selling pressure, if you will. It's not in a low liquidity environment, which creates aggressive price action to the downside.
Okay. The aggressive price action, to your point, has been much more to the upside. But it gets interesting when something changes a little bit here. As you mentioned, liquidity looking pretty good. I mean, obviously we've got the calendar working our favor. This morning you talked about the semis, which indeed do still look pretty weak relative to the rest of the market. Any other kind of wild cards? Any other inputs that we should be keeping an eye on right now?
I mean, obviously, we have inflationary data coming out this week. I think that'll be a highlight, especially when you're looking at CPI. If it comes in fairly hot, that could probably provide you maybe a catalyst for continued selling in this market. But after you get through CPI, I'm not sure even if CPI comes in hot, Oliver. I think the Fed's still going to cut. But if it does come in really hot, that could create a little bit of uneasiness in the markets, and that's where we can see continued selling. But after that, I mean, the calendar is, for the most part, in your favor. We're going to have the quarterly options expiration, so we actually should see a little bit more churn when you're looking at the E-mini S&P futures and just the futures contracts in general. They'll roll off, or you'll start seeing a rolling period from the December contracts going out to those March contracts. So that'll create synthetic volume in the market. And then we also have, obviously, some of the bigger expirations, the JP Morgan collars, the QYLD expiration coming out next week. So those are some of the option items that are on the radar. But for this week, it's really economic data and just being able to focus on the news and what the news flow is going to bring us. And when you have a lack of a narrative in the market, sometimes news can actually weigh pretty heavily on the stock, just like Nvidia, which, I mean, their China sales is what, 12%. 15% of total revenue, but the market kind of, hit the stock anyway.
Yeah. All right. S&Ps look like they're stabilizing somewhat, but falling short of that 61. Again, appreciate the thoughts, Kevin Green. Good stuff. Good luck.